Hello, my name's Nathan Rutty with Canopy Mortgage, and I want to talk to you about a reverse mortgage. Don't be scared about it. It's a great program for seniors who are in need of money. We've already talked about what a reverse mortgage is. The biggest question we get is what happens to the home after the individual passes. So, on here, the CFPB and HUD, when a reverse mortgage loan, can my heirs keep or sell my home after I pass? Absolutely. As you can see here, it depends on whether there are co-borrowers, which I'll get into that section, but typically 99% of the loans, there's a husband and wife that go on the reverse mortgage, and when one of them passes, the other one gets to keep the property as long as they meet the eligibility requirements at the time of closing the reverse mortgage. But if one person passes, they meet the requirements, and there's one surviving spouse left, and the family members, before they get into the reverse mortgage, they always want to know what happens when our parents or our mother or father pass. Right here on the CFPB website, dated May 28th of 24, also on May 2nd of 2025, most recent, it just updated the requirements on what happens with reverse mortgage passes if there's a co-borrower. So right here on the CFPB website, and we all got to follow the same guidelines, the bank does not want your property. The bank wants to lend you money, and the bank just wants their money back. So what happens when the person passes? And the best thing is obviously put the home in a trust, and definitely speak to a qualified person about putting the property into a trust so it avoids probate. That's the last thing you want to happen. So parents get a reverse mortgage, or you're looking to get a reverse mortgage. It depends on whether there are co-borrowers or eligible non-borrowing spouses. If there are neither, to keep the home, the heirs, the family members, must pay the full loan balance. To sell it, they must repay the full loan balance, or at least 95% of whether the appraised value of the home, the balance is owed, value if the loan balance is owed more than the home's value. So if you as the heir, or you're looking to get a reverse mortgage, and you pass or your parents pass, then are you wanting to keep the property, or you just want to sell it, or you want to take the bank back? Those are the three options. Either you sell it, you take it on and you sell it as the heir, and you can't afford to buy it and whatnot. You want the bank to take it back, and I don't want this mess. You owe more than what the property is worth, or you want to buy it. So those are your three options. If you're looking to sell it, and the balance is, let's say, $500,000, and the home is worth $400,000. As you can see right here, pay no more than 90% of the appraised value. So if you want to sell it and make a little 5%, then you take that onus on, you sell it. The appraisal comes in at $400,000, you owe $500,000. The buyer that's buying that property, of course, the bank's got to agree to all this as well. Then they're going to buy at 95% of the appraised value. Or you, as the heir, want to take on the home. The same thing applies to you. Owe $500,000, home's $400,000. You can buy it at 95% of that appraised value. Is that a win-win for you? Absolutely. Now, if the home appraises for $500,000 and you owe $400,000 to the bank, they owe $400,000, then the bank's going to want the full $400,000 back. At the other spectrum of it, you owe $500,000, the appraisal comes in at $400,000. That's what the insurance pays, is that difference. So communication to the lender at the time, the servicer at the time of passing of the individual, that's the key. Is you're going to want to communicate to the servicer, the people that your parents made the mortgage payment to, or you're making the mortgage payment to. Communicate with them and let them know what's going on. Like I said, they have to follow the steps. They have to follow the letter of the law if there's no communication on starting foreclosure procedures and all that kind of stuff. But you, as the heir, you need to communicate with the bank. Make sure the property's in a trust, because if it's not, it goes to probate. You have no rights to the property if nobody's on title, if it's husband and wife, is joint tenants, or community property right of survivorship. But definitely speak with somebody that knows about trust. I got my properties in a trust just for that reason. If I happen to pass, then everything goes to my wife. If we both happen to pass, then everything goes to my kids. So you definitely want to speak to somebody that sets up a trust and will and all that kind of stuff, just to avoid the probate process that can be long and lengthy. But communication is key to the bank. So FHA's, here's HUD's, FHA's guideline regarding a HECM loan, a reverse mortgage for person eligible non-borrowing spouse. And it says it right here on if the non-borrowing spouse, let's say the person took it out was 66 and then they get married at the time they were a single person, then they get married, you got to meet these guidelines. And if you don't, then the bank says, well, you weren't part of the process at the very beginning. They're going to want to start the foreclosure proceeding or getting that money back. So the key is what happens when I pass? Your heirs get the property, and they can determine those three things: sell it, buy it, or give it back to the bank. Those are the three options. They're very easy. And like I said before, 95% of the loan to value. It even says right here, as of January 2nd of 2025, right down at the bottom, if my heirs want to keep the home after you and your eligible non-borrowing spouse pass, your heirs will repay either the full balance of the loan or 95% of the home's value, whichever is less. And that was as of January 2nd of 2025. Is this not a win-win? So when people think a reverse mortgage, a bank gets your house, no, they don't want the house. Just like a car auto dealership, they don't want to repo the car. That's too much trouble. They just want the money back. That's all the banks want. They're not in the business of buying and selling homes. You as a consumer are in the business of buying and selling homes. The bank is in the business of lending money, and that's all they want back. So that right there, as you can see, the heirs get the property. Their surviving family members can do those three options. I would love to talk to you and your family about a reverse mortgage. If you're looking for a reverse mortgage in California, Arizona, Nevada, and Utah, I want to talk to you. I'm licensed in those states. Canopy Mortgage does reverse mortgages. I can go through the process and see if this is a fit for you and your family, and this is going to be the right decision for you guys. And I think it is. If you are a senior and you are not living on your day-to-day expenses, on what your income is coming in, use that equity in your home to survive. Let's talk about that. 909-503-5600. That's my direct cell phone number. Give me a call. My name is Nathan Ruffey with Canopy Mortgage. I'd like to talk to you about a reverse mortgage and see if this is a benefit, having a conversation. If you don't know about it, at least you'll be educated about it, and you can make that good, sound decision to say, yes, this is good for me, or no, it's not. And now you would know, dive in deeper into this. Let's connect. Let's talk. 909-503-5600. Thank you very much.